Hello, cannabis traders and investors currently in travel mode, so using the laptop, mic, and camera a bit different, but we're going to check in on the cannabis sector. Unfortunately, not a whole lot of good news over the past couple of days. As we talked about in the last video, if SAFE is not in NDAA, it's an aggressive short. And the reason was we were pricing in a very high probability that it was going to be in the NDAA. That probability was so high because we were getting fed information from whatever sources, and there were definitely pumpers involved. And as I said on Twitter, this is something that you want to pay attention to. Who were the people that were really pumping this? Because some people, truly believed it was going to happen, but there were absolutely people out there that were doing this for financial gain, just to pump up the price and to build that hype. So there are lessons to be learned from anything in trading if we take the time to review those lessons and apply them in the future. And so the lesson here is, if you are running extremely strong into an unknown event, you take some off the table. You take a bit of profit. You can leave the majority of your position. You can take half off, whatever it is, you take some profit off. And this was a really good example of what pricing in means. And Google TheChartGuys, what does priced in mean? And look at the videos, and there's a video that explains this in depth. But essentially what happened, if we'll just review real quickly before we do our breakdown, we had, this is the market pricing in 70%, 80% chance that SAFE was going to be added to NDAA, because that's what we're being told. This is a little bit of uncertainty. This is just profit taking just in case. And the last video we put out was after that day, and those were clearly bearish reversal candles. Again, technical analysis isn't going to predict things and say, what's surely going to happen, but those candles told us that we are likely to see daily consolidation. And as soon as we broke the low of these candles the following day, it confirms to us, yes, consolidation is underway. And from that point forward, all we did was get more and more information that told us we're not getting SAFE in NDAA. And right now, the last 4 days, the market is pricing in no SAFE in 2022. And the reason that I can say that is the magnitude of this sell-off. It is brutal. I was talking about looking aggressively short, and I definitely didn't take full advantage of swing trading bearish positions because I was uneasy with the possibility that a headline overnight would, blow up my short position. But this pullback is giving back over a month of gains. We're not just giving back the 3-4 day pump from the run-up. This is giving back over a month. This is people bailing, obviously, and this is shorts piling in. And we're in a scenario right now where the broader market next week has a couple key events with CPI numbers on Tuesday and FOMC on Wednesday, and that's going to dictate the short term. And if we see weakness in the broader market, these are bear flags on monthly timeframes. We can see fresh fear lows, and I don't expect to just drop straight to those levels. I expect for there to be a bounce, but a trader like myself looks at the backdrop here of the fundamentals and looks at the technical setup and says, I am actively scouting a bearish position for the next time we bounce on the daily. We can bounce 20%, 30%, whatever it is, and then we know we're just going to set a lower high compared to where we came from, 477, and if we confirm a daily downtrend after that, then we're going to be looking down at really the only nearby support of 223. So bears are back in full control. The headline risk right now is with bears because there is still a possibility where, SAFE could get added to the whatever bill, or it could be a standalone bill or whatever. It's not 0% chance. The market could be wrong. The market was wrong on the way up, and right now the market is telling us 0% chance in 2022. And so if there were to be a surprise headline that there were going to be a vote on it, there would be a little bit of a scramble for shorts to cover without a doubt. There would be a nice trade to be had off of that. And then, of course, it all depends, if it were to pass or not. But the headline risk is with the bears after the size of this drop, just because we can't get any more bad news right now that's going to hurt these names in the short term. Because, again, this is the market pricing in the worst of the worst short-term news that SAFE is not going to happen in 2022. So we'll see what ends up playing out here, but I know I'm very actively going to be paying attention to this sector again, late summer 2024, as we head towards the election, and I do believe that that's when we will see perhaps Biden or whoever else pulling some tricks out of their bags to get some headlines and attention and momentum into the voting season. The thought for me is, we're looking for rescheduling, and Biden said to, look into this, but why would they do that now versus coasting on that momentum like they did into the midterms with this pardon? So that's my mindset. And again, it's just completely emotionally detaching from this sector is the goal. If you want to ideally maneuver and profit and hold on to gains, and learning trading, learning technical analysis can help look at things and say, okay, this is a bit of euphoria, I should take some profit, and this is maximum fear, maybe I can reload the profit that I took. So S&P 500 is a potential daily bear flag, and if it confirms with a bearish reaction to CPI and FOMC next week, then we have further weekly consolidation underway. And at that point, it's just a question of how much of this bounce from the last 2 months do we give back? Do we give back more than half of it, which is a red flag for bulls? Do we give back just a bit of it and then see continuation if it's a bullish reaction to CPI and FOMC? But we know right now the market over the last week and a half has been weak. We topped out and the bears have controlled over the last handful of days. So that's the backdrop, and that matters. When you're seeing a ton of volume come into a sector or an individual stock, the correlation to the broader market matters much less. But as the volume trickles off now in this sector and tapers off from the high volume scenario from a week ago, we're going to be looking for the correlation to matter more again. And again, right now, it's if we get no safe in 2022, it's an easy short for bears. It's one of the weaker sectors out there. There's bearish correlation, and it's just that's what they're going to be looking to take advantage of. So CGC just unable to get any kind of bounce going. Look at the closes at the low of the day, pretty much 4 days in a row at this point. We broke 298 support, and the next level we're looking down at is, after the low of today, 287. There's really not much. We're looking at 267 as a previous resistance, now acting as support, and then the low of 223. And again, if you look at these monthly time frames, let me get rid of these EMAs just so we can zoom in a little bit better. But that's a bear flag. So we have to be prepared for the possibility that we see another leg down. In my opinion, it would require the broader market pulling back 5% plus from here, maybe more, 5-10%. But it's absolutely on the table as a possibility. So you have to have a game plan established for if that does indeed play out. And the hourly downtrend is very clear here, where we just open and the bears control the entire day. And that's now happened 4 days in a row. There's not even any hourly bounces. Just into the end of the day, a little bit of covering for perhaps the bears that don't want to risk any overnight headlines, but that's it. And the next time we bounce, anything under 317 is just an hourly lower high. Until we see a clear hourly uptrend, the bears have absolute complete short-term control. When we do see an hourly uptrend next, we're going to be looking for the daily lower high. There's a ton of space for it to form. And swing trading bears, at this point, the risk reward of an entry down here is not good for bears. So bears are waiting for that daily bounce to cool things off a little bit in terms of oversold conditions and to ideally get a better risk reward entry for a bearish position. TLRY breaking 359, again, the lowest price we've seen in over a month. 349 support just broke by a couple pennies. Next level 345 and then 313. There's a handful more supports on TLRY than there is on CGC at this point. And just out of comparison, CGC divided by TLRY shows us that CGC has been weakening compared to it all this pullback. CGC is weaker than TLRY on this pullback. And again, this ratio chart shows us that comparison. If it's in a downtrend, the name that's in the numerator is weaker. So Canadian cannabis, no sign of a bounce. U.S. cannabis has had a bit more of a bounce. Again, these are monthly bear flags. Look at this pullback, just not a strong longer-term bounce. Weekly time frame, we've given back. As I talked about the S&P 500 retracement, we've already given back. If we use our Fibonacci tool here, Alt-F, we've already given back 70% of this bounce over the last 2 months. So in the blip of 4 days, 70% of 2 months' work is gone. We have seen bounces on the way down, more so than Canadian cannabis. Back on Wednesday, there was a bigger bounce into the close. There was a headline about possibility that it's get added into this other bill, omnibus. I don't even know how to say it. I forget, but Then we had a bounce this morning, but the bulls showed us relative strength compared to the S&P 500 here and here, but the S&P 500 absolutely dumped into the end of the day, just high volume free fall, and that really hurt MSOS bulls, which were close. If we break 1055 there, it's a very different close than what we currently see. So it's just a daily inside bar. The bulls are attempting to defend $10 support. I was looking for a $10 support break to play an hourly bounce this morning, but didn't get it. And you can see this base at $10 that the bulls are trying to cling to. But again, it's possible that if we see broader market weakness, that we break this level on Monday or Tuesday. And then we're looking down at 940 and 870. 940, 879, and 870. The only real supports that we have. And a lot of space for a daily lower high to be the result of this next bounce. Individual names, nothing really different here. So Curaleaf, again, you can measure if you want to know who's weaker on this drop, measure how much has been given back of the bull move. Curaleaf on the weekly time frame here, we've got support of 488 and 448. A little bit of a bounce attempt. But again, we have to see high of today break next week if the daily bounce is going to be underway. And again, I can see the bears licking their lips, just waiting for that daily lower high, because potentially by next week, by the end of next week, we'll be past the time for when it can be added to any other bills. And the clock is ticking, as we head towards the end of the year and as the lame duck session comes to a close. So if I'm a bear, I want to see one more little blip of hope for a headline to pump the price up. It won't be a significant bounce. It'll be, a couple of days, in my opinion, to then scout that lower high. If it fails again, and it's just more despair. So I wish I had better things to say for the bulls, but again, just always keeping it real because it's not looking good. So 1039, 950, and 890 are supports on GTBIF. And a lot of space for the daily lower high next time we bounce. CRLBF, a lot of insider selling going on. 281 and 239. And a couple people made a good point. If we were really going to see high probabilities that SAFE was going to be passed, why wouldn't insiders be buying? Insiders had no confidence that SAFE was going to pass, because if they did, it would be an easy buy. But we didn't see that. All we saw was selling from Cresco Labs, and whether or not that's scheduled in advance or part of a compensation package, I don't care enough to look in depth into it, but certainly no buying. So just range bound and sideways here on Cresco, TCNNF. Again, there's a handful of supports here, but I'm not holding my breath. If we see a bullish reaction in the S&P 500 to FOMC and CPI, we can bounce, a solid 30% off the lows. But a lot of things have to align for that to happen. 1082, 1026, 950. I'm just looking at the lows of every little period of consolidation. Where do we find a base before making the next move up? That's how I identify previous support levels. And here we can see, we had a bounce of almost 100% on TCNNF, but at this point, we've given back $5 of that bounce, and we're currently $3 above the low. CMPS, psychedelic name, still sideways, getting really tight. We're going to see volatility here. We can absolutely break in either direction, and so worth watching because MNMD getting nice and tight sideways. It's been bearish a lot longer, and ATAI holding on a bit better recently, but again, it's just all sideways ranges among the psychedelic sector. So again, long-term I'm bullish. 2024, absolutely I'm looking bullish, but we have to prepare for a number of possibilities. One, how much does the broader stock market pull back? Do we head back towards the recent lows? Do we have a bullish reaction or a bearish reaction to economic data next week? Is there any chance for SAFE before the end of the year? Right now, the market is saying nope, no chance. And if that were to change, we would see shorts cover a good bit, but bears are scouting daily lower highs. So that's where we stand from here, and we'll keep checking in into the end of the year to see if anything changes. But for now, it's a big win for the bears. So again, a lot of painful lessons there, but have to ensure that they are lessons and that we don't repeat mistakes because that would be a bad thing. We have to ensure that when we make a mistake, we don't make that mistake again for a long time if we're going to continue to improve at this game. And I know a lot of you just have the long-term mindset, but when you're seeing swings of 30% up, 40% down in such a short period of time, it's worthwhile to learn how to take at least a little bit advantage of that. Because again, I could sell a quarter of my position into euphoria, and now I could buy back a quarter of my position 25% lower than where I sold it. So even if you're a long-term mindset, it's worthwhile trying to improve. So feel free to ask any questions. I hope you have a great weekend, and we will see you soon.